Hi, I'm Keon, a senior research analyst with Thomson Reuters Lipper, and I'm here to speak to you about fund flow activity for the week ended Wednesday, April 5th. We'll start by taking a quick look at the market activity for the week. Both the S&P 500 index and the Dow Jones Industrial Average suffered slight losses on the week. S&P 500 down 0.4%, and the Dow was down 0.1%. It was a mixed week for economic data. Probably the most influential news that came out last week came from the Fed. Big surprise there. The Fed's talking about starting to trim some of the quantitative easing assets from its balance sheet by the end of the year. This threw some uncertainty into the market as the street tried to figure out, would it be gradual, would it be drastic, and what would the impact be to the equity, to the markets in general. All right, let's turn our attention back now to the fund flows activity for the week. We'll start by taking a look at our fund macro groups. Equity mutual funds saw outflows of $7.4 billion last week. Taxable bond funds had positive flows of $1.8 billion. Muni bond funds saw $368 million leave, and money market funds took in $4.1 billion in net new money. Let's move on now. We'll start by taking a look at our equity fund groups, starting with equity mutual funds. The $7.4 billion in outflows that I previously mentioned was the largest weekly outflow of the year for the group. It was business as usual as far as the split. Most of the outflows coming from domestic equity funds, domestic equity mutual funds, as we saw $4.7 billion leave their coffers. But what was a little bit new this week, non-domestic equity funds also threw in a fairly big chunk to the outflows with $2.7 billion leaving. This was the 6th week in 7 of outflows for the group, for the equity mutual fund group, and overall puts them at $10.5 billion in net outflows for the year to date. Let's move on to our equity ETF group now. This group also had outflows for the week. They saw $4.5 billion leave. It was their second outflow in the last 3 weeks. This comes on the heels of 7 straight weekly inflows in which the group took in over $58 billion in net new money. The biggest outflows last week belonged to the SPDR S&P 500 product, which saw roughly $7 billion leave, followed by the PowerShares QQQ ETF, which saw around $900 million in outflows. Largest inflow for the week belonged to the iShares MSCI EFA product, which took in $1.3 billion in net new money. Let's move on to our taxable bond macro groups now. We'll start by taking a look at taxable bond mutual funds. As mentioned previously, the group had net inflows of $1.8 billion for the week. It was their 6th inflow in the last 7 weeks, and for the year to date, they've taken in almost $50 billion in net new money. Big players last week, high yield funds took in almost $1 billion in net new money, and core plus bond funds had net inflows right around $700 million. Let's move on to our taxable bond ETF group now. Inflows for this group as well last week took in $2.5 billion in net new money. It's the 3rd straight weekly inflow for the group. Similar to the mutual fund data we just spoke about, high yield products attracted the most new money last week. The iShares iBoxx High Yield Corporate product took in just over $600 million, and the SPDR Bloomberg Barclays High Yield ETF had net inflows of $536 million. On the outflows side, we see the iShares 20-plus year Treasury product had about just over $200 million leave their coffers. Let's move on to our next group now, Muni bond funds. Muni bond funds suffered their 4th weekly outflow in 6 weeks last week. The $368 million outflow for the group this week was driven by funds in the general muni debt, short muni debt, and intermediate muni debt categories, which had net outflows of $173 million, $78 million, and $68 million respectively. Okay, time to take a look at money market funds, our last group to take a closer look at. As mentioned previously, the group took in $4.1 billion in net new money last week. The major contributors to these inflows were the institutional U.S. Treasury money market funds category, which had $2.2 billion in positive flows, and also the institutional U.S. government money market fund category, which had $1.6 billion in net inflows. Well, that wraps up our report for this week. If you'd like to take a closer look at the data for yourself, please join us at our website, www.lipperusfundflows.com. And please join us here again next week where another one of our analysts will speak to you about that week's fund flows activity.